Hey guys, it's Mark Coe on 1st of November, so we're into a new month here towards the end of 2018. Just wanted to take a look at a couple follow through for the week, something I talked about on Sunday. So on Sunday to start the week, I said my big focus would be to buy dips in crude oil and to buy dips in the E-minis, and I just want to show you kind of how two of these things worked out and what one looks like that works and one that eventually breaks a bottom edge. So let's start with crude oil. So the thought process coming in on Sunday night to start the week was this bottom edge, and it wasn't a massive weekly or daily long-term bottom edge. It was fairly short-term. It was just created in the last week, but the idea was still to play this bottom edge from the long side on dips, and it did get two opportunities short or earlier in the week, very short-term bounces off of this edge, which did result in some profit opportunity. But eventually, yesterday on Wednesday, it broke and got some confirming close. So the idea coming into Thursday's trade was we are off this buy the dip idea and back on sell the rally. I said this morning a really nice rally would have been a move back to this edge, back to the 65, 70, 66 area for some sell side. It never managed that. The highs in the U.S. session were short of that. So you see what it did. It developed um, a shorter term, I should say, a lower bottom edge. So there was not the opportunity for a blow through that level and a tap back to it. It just simply didn't achieve that level. The point I'm trying to make is when identifying a level and a direction that you're going to play, it's still based on whether or not that level is maintained and holds. And as I said, there was some opportunity on Tuesday and Wednesday into this edge. It just didn't hold. So they were short-term opportunities, small rotations, and eventually the sellers won the battle. So no harm, no foul. Some short-term opportunities. The edge eventually gives way. Should have been providing for a stop area or at least recognizing this edge is not holding. Again, what I focus on in the shorter term intraday mentality is one of closes below a level to really signify a break of that level. And yesterday, Wednesday, you did get a pretty significant break uh, post weekly crude inventory. So post data 10:30, and you did get a pretty significant break below that. So that to me was kind of the confirmation that we no longer want to be playing long side. And as I said, this was the move into the level, right? It provided almost a dollar bounce, but eventually gives way, and fairly small risk there to let that level give way. Now the S&P was the second market. I also said I want to be a buyer of dips, and this one just played out just really spectacular. Um, it was this bottom edge, and as we started the week in the 2600 handle, but we dipped one day down to the just above 2600, the next day to 2630s. And again, both of those were set up the same in that I was playing a level, crude oil being a much shorter term level. E-minis, the S&P, the futures contract, was a much bigger level because this was coming from, again, the April rally, and that was just simply the bottom edge of the April rally. Now, to look at that on a shorter term, a tighter picture, what that edge looked like, there were a couple spots in there that were really kind of significant, one of them being in the 2630s, and you can see the reaction off of it on the 26th of October. That's why it was even highlighted. This, again, this is the Monday sell-off, which touched the 2603 area. Again, a rally back. So this is only a 30-minute chart. And on Monday, you see the market couldn't even close down there. And what this really does is it collects a lot of short-term stops. It picks up a lot of momentum. But the rally off of the lows was quite significant, managing a close back on this same level. The idea was daily model that I run got long that next night. Short-term stuff got long. And again, nothing but rally from that standpoint. And the difference being kind of looking at this is it walked in with a viewpoint that of I want to be a dip buyer, played right into the zone, and then I've talked about the volatility in the E-minis, but it's been a really volatile market which has seen further movement both up and down, right? Both moves have been a little more extreme. and it just happened to be a really nice level and got a great reaction. And the flip side of that being that when it doesn't work your direction, you know where you're going to stop yourself out. You know what your risk is, and that's what the key remains: is always knowing what your risk is before you deal, accepting it, and then let it work out. I mean, I talked about this from the standpoint of rally. We took profit 27.10, which was a little quick, but for a short-term trade, I thought it made a nice sense just getting back to this breakdown level. That was really what it was playing off of. What the E-minis eventually achieved is 27 and a quarter. Now testing 27.40s as we close here on a Thursday. So, as I said, no real complaints on the week. Couple other things, you are seeing some breakout of dollar weakness. So Aussie dollar, which has been in a tight month-long consolidation, finally breaking to the upside. So it's nice. We've had a long position on Aussie dollar in our longer-term model, but it was nice to see a breakout in Aussie dollar. Euro and pound have both managed some rally. My preference in euro and pound have been to buy dips, and really it has not found levels just until the last day or so that they've been able to rally. Aussie has managed to hold near-term bottom edges for the month, right? It really didn't get tested a whole lot, and this is the consolidation I'm speaking of, the October consolidation in Aussie. The breakout there, I will prefer, and I will remain a preference to buy dips in Aussie dollar, targeting further gains. Euro dollar, I mentioned it the other night on Twitter, and I said this is a really great spot for very tight risk. Problem was it was 1340, and we managed to come down and touch the August lows. So it didn't really hold the 1340 level. It managed one more day of lows, which just matched the August lows, and then rally from there. Pound dollar is doing a very similar thing. There again, at each big figure in the pound, you've seen some support, but what they really did, both euro and pound, is they came down and tested the August lows. And my consistent opinion here, or analysis I should say, has been that I do not want to be a seller into these edges. I want to look to be a buyer. Problem was, until as I said, the last day or two, you've just seen continued weakness, dollar strength. My talk has basically been newer lows here should be really tough to accelerate. That's really been what I've been repeating. So I would say that they've continued, and now you've seen a rally, but for several days and weeks there was no real reaction with buying euros or buying pounds. So hopefully now we'll see a little further up move, or at least some more volatility and some two-way activity, at least giving us a chance to participate in some FX movement there. All right, guys, for 1st of November, cheers. Hope everybody had a great week, and we'll see you on Sunday night, and hopefully some more good stuff. Cheers.